We're looking at the dollar chart of silver since bullion has been of a lot of interest recently. Let me start. On the monthly chart, we can see that the 20-month average has historically held up pretty well since 2003. If I just take a line chart for silver, we can see it's taken support in 2005, 2007, and even after 2009. It broke only in 2008 when prices fell right through to the lower Bollinger Band. Now for several months since the 2011 high, the sell-off fell below the 20-month average and has stayed below that. So it's an important resistance level if we are getting bullish. At the same time, the 40-month support has actually held, which is a good sign. But I would really like it to go above $33.8, for it to show further strength from here. So I think that's one level to keep in mind from the monthly chart. Now let's get down to the shorter term structure, and in the near term what I'm able to see is, if you've been tracking the counts on silver I've been putting out since last year, I was looking at the fifth wave completing an ending diagonal. Some people may mark this rise in September of last year, August September of last year, as a B wave. Either way, it has fallen after that to the $26 mark, and there are three supports. Three times it's taken support close to $26. Now, what is important is that each high is a lower high since the high in April of last year. So lower, you're making lower tops, and the bottoms have been lower and then flat, and this amounts to what looks to me similar to gold, a descending triangle. Now, the next thing which I'd like to highlight, which is important when we're looking for reversals, is retracements. Now, why I'm looking at this is that recently prices have moved a little above the falling trend line, and it can often be called a breakout, but breakouts can give you can get false breakouts, so we need to really verify. In gold we are still very close to the 61% retracement mark, so I'll just show you that each of the bounce backs, the lower tops that we got since last year's high, ended very close to or a little above the 61% mark, as you can see for this wedging pattern. A repeat occurring when you take this entire range. You notice that the high in October 2011 was surpassed in March 2012, and it touched the exact 61% retracement of the previous fall. And now, taking this range into account, the 61% mark comes in at just around 32.9, just short of $33, and that would be an important level really to verify whether this breakout is for real. So we are very close to 32.9 and 33.8. I think are the two long-term levels that one should look at, where if this is a false breakout, you get a potential reversal in silver to the downside, and if it sustains above that range is when we would get a fair idea as to prices moving up further. So till that point of time, there's a risk that this move could still be what I think is a false breakout. And in terms of wave structure, then what it would look like is this decline here. Some may mark as 5, but I would say overall it completes a W. The retracement rallies was three-legged ABC, so it could be an X wave. But if it's a triangle, then broadly I would mark this high as A of the triangle, B down, C up, D, and E wave, the last leg of the triangle forming right now. But just to go with the ABC structure, you again have a 3-wave decline here, which could again be a Y. And this recent run up I've been showing in the short term is another 3-wave decline, and we are made a very minor A, B, and C advance, where wave C is now a 5-wave and we are in the 5th. So that's the overall structure. If this is right, then this E leg or X leg of a retracement is about to complete, and till that scenario is on, you should watch the two key levels that I mentioned today for downside risks. That's all in this update. Thank you.